That is early. Okay, you guys. For those of you listening that are not saying hi, if it's your first time, I'm Mary Jo Irmen, the author of the book Farming Without the Bank and Life Without the Bank. And we are going to talk about the infinite banking concept today and who I've talked to this week for clients. And then, just for good added measure, we may talk a little bit about the bills in Congress. Like I was just saying, I don't love to talk about that stuff, but they're there and they're going to affect us. Oh, Nikki, that's so funny. Winnie is actually in Haley's room because Haley is homesick today. So I could have her in on my live. Well, good morning, Bruce. Another fire. I didn't know that Montana was having fires. Well, be safe again. Are you ever home, Bruce? Or are you gone fighting fires all the time? My goodness. Okay. Good morning, Nathan. Well, at least you have corn to harvest. That's fantastic. How is it going? Is your yield good? And it's better to be expected. And I haven't even looked to see what corn prices are doing. If they should be up. We didn't have anything to harvest here. North Dakota sucked this year. All right. Well, let me get to my thing here. So I had a client this week that had read all of my books, Nelson's book, listened to my podcast, listened to James Nethery's podcast. Lots of information he has consumed. I think any book on the subject, he's pretty much read it. So he was very well prepared. And when he came in, he said, well, I want to set my policy up for more than what I can afford. So if I can afford $12,000, I want to set it up for more so that I have room to put the extra interest over the next few years. So here's something to think about. I don't do this a lot. And the reason why is because most people suck at being honest bankers, right? And myself included in that at times. And so when we really implement the infinite banking concept, and in my books and in Nelson's book, we talk about the fact that we should be paying ourselves back plus interest. Okay? So if the life insurance company is going to charge us 5% interest, why don't we pay it back at 10? Who cares if you pay an extra 5% if it goes back into the policy? But when we do that, we have to make sure that the policy has room to hold that 5%. If it doesn't, which it's not always going to, we're going to have to start new policies. Doesn't matter. So if it doesn't hold the extra 5%, then we just put it in a savings account off to the side. And when we start our new policy, I use it as a dump in so that we can have extra money going in year one. Okay? Give that policy a boost. However, if we want to build it in now, we can. We just have to understand that the structure of the policy is to say, hey, so much is going to death benefit, so much is going to cash value. And the bigger the premium, the more that goes to death benefit. So if you don't fill all that cash value, are we doing the policy a service by not filling it all the time? Now, this gentleman is going to be super honest. Like, first of all, he's an engineer. That explains a lot. Engineers are very, very organized people. And so chances are he will do it, right? He's done his homework. He knows exactly what he wants. Chances are he's going to do it. I did remind him, though, life gets in the way. And he's going to start over the farm. So the farm never got sold. It got passed down. He got deployed. So he has to start, and he's been gone. So they've just been renting it out. So now he's going to have to start over farming, right? Dad passed away, and shortly after Dad passed away, he got deployed. All the equipment got sold because why let it sit there? He didn't know how long he was going to be deployed, I don't think. I don't know how all that goes, but anyway, so he does have to start over to some extent. Life's going to happen, and we need to be prepared for that. So just that little bit of a friendly reminder. If you're going to push and be very adamant that says, okay, this is what I'm going to do, if it's completely unreasonable, I'm just not going to be okay with it. I'm not ultimately telling you what you can and can't do with your money, but I do know that life happens, and I've seen enough people that have said, I can't pay my premium because life happened, or this contract fell through, or that fell through. And so I am always here preparing for worst case scenario. In his case, he's gonna have a really good job off the farm job, and so he'll be okay with where he's at. I just said kudos to you for being an honest banker, and you're not even a banker yet, right? But kudos to you, because now you have the ability to have a policy that can hold the interest, and you're going to be honest and pay that interest back. Too much rain. Ugh. Bruce, I don't think you're ever home. Okay. Then I have another gentleman that he's young, working off the farm as well, but he is taking over Grandpa and Grandma's farm because Mom and Dad didn't farm. And so he is fortunate that Mom was an only child, and the farm it's him and his siblings. But he's the only one that farms. And so he is going to inherit the farm. His mom could care less about any of it because it's ultimately would go to him anyway. And he's already farming it with Grandpa. So that was a fun conversation because he's planning. Here's the downside. The upside is he's getting everything, right? The downside is that he doesn't have a lot of time to plan. It's not like, oh, he's in his 20s and Dad's in his 50s. And he should have a fair amount of time to learn and to prepare to buy the land and all that stuff. No. Grandpa's like 80. So we don't have, or mid 70s, late 70s, I think. We don't have a lot of time for him to prepare to have the money to buy the equipment. Yes, there's not a lot of loans on the land. They have a loan on the land. They don't have a lot of debt anywhere else, or any debt anywhere else. But that doesn't matter. If he gets the land and the equipment, who gets the cash? So if the cash goes to his mom, then that cash was being used to operate the farm. If he doesn't get the cash, he's going to have to come up with operating, or he's going to have to go to the bank for operating. Or Mom's going to have to give him the money to operate that she inherited. So as awesome as that sounds, that, oh, he's going to get everything, and he's going to get some debt, he's also young with not a super ton of experience. So is the bank going to lend him money? And they don't really have a relationship with the bank because Grandpa's always been using cash. It could be detrimental, and to the fact that Grandpa's too old for us to insure. The kid doesn't have the money to do that. And Grandpa and Grandma hate life insurance. They don't want anything to do with it. Well, that's scary too then, right? So some of these things we need to prepare for, because what happens if there's no money there? What happens if the money they give to the other siblings because they're not getting the farm? People think, oh, somebody's going to get land just given to them. Aren't they lucky? Yes, they are fortunate, but they still have to know how to maintain it so that they have the ability to farm it. If they don't know how to maintain the money and maintain the land, we're not going to produce any income off the farm. So it's not just that easy that, oh, you get land and oh, miraculously, you just make money. That's not how that works. Good morning, Brian. Cornelius, 50 I think is fine. I don't do you plan to die at 55? I'm teasing. No, I don't see why 50 is too old. I don't see why 60 is too old. Cornelius, I have clients that start farming when they retire. They work until they're 65 and then they want to go back to do what they were raised. You know, if they were raised on a farm, they want to go back and farm. They're probably not farming large acres, but that doesn't mean that you can't start. 50, you may have another 50 years to live. That's a long time. Okay, I had another guy that was a business owner. He was not a farmer. And I don't often see these kinds of situations, but they do happen. That in this scenario, we had a lot of credit card debt. We had loans on things like campers that we probably don't need. And he said, you know, we only use it 2 to 3 times a year. There's really no need to have it. And then he had a vehicle loan at 8% interest. That is an extremely high interest rate for a vehicle. And so I asked what his credit was, and it's mediocre. It's not like super awesome. And so I don't know if that's what it was. He did go to the dealer to buy this vehicle. So let me just share a little tip that I learned the hard way. If you go to the dealer, they deal with different financial institutions, right? They have banks, whatever. They get a kickback for every loan that they do through a certain financial institution. Every institution is going to give them a different kickback. So I had gone in one time to buy a vehicle and I said, tell me, when I get here, I want to just have the paperwork done. When I get off work, I want the paperwork done. I don't want to sit here for 3 hours waiting for you to do the paperwork. And so I got there and he's like, well, do you want me to buy the loan down? Or buy the rate down? And 0.75%? Sure. Stupid question is what I was thinking, right? Absolutely. So he acts like he's giving me this great deal and I'm thinking, oh, fantastic. I think my car loan at that point, and this was probably 10 years ago, I think that car loan at that point was about 4.25 or something like that. And I end up going through the bank 2 days later, and see a big sticker on the window that says 2% interest car loans. And I said, wow, that's a low interest rate on new cars. Yeah, anything 10 years old or newer. 10 years older, well, my car was like, I bought a used car, like, I don't know, 4 years old, something like that. And so I came in and refinanced it. Well, lo and behold, I find out through all this refinance stuff that we did that dealership actually ran my credit through that bank, but chose not to do business with that bank. Well, why would you not do business with the bank with the lowest interest rate? Because you're not going to get as big of a kickback? So you're going to charge me more so you can get a kickback? You've got to be kidding me. And so obviously I refinanced immediately. And the car company, who I then did call, said, oh no, we never ran anything through there. I seen the paperwork. The loan officer, because I refinanced so quickly, they still had the paperwork. Don't tell me you didn't run it through that bank. So if you are dealing with a car dealership, from my experience, if you are dealing with a car dealership, don't just assume they're going to give you the best rate. Go to your local credit union, go to your local banks and see if their car loan rates are better. You know they will cut you a check that you can then take to the dealer to buy that vehicle. If you're going to be looking for a vehicle on the weekend, then put money down to hold it or something. and ask around or check now before the weekend comes. But don't just assume they're going to give you the best rate. And look at your interest rate to make sure that they're not gouging you. Pay attention to that interest. It matters. Absolutely, it matters. So the problem here, come to find out, in this relationship was we have a spouse that just spends money and does not say anything, and money is just gone and things just get bought. And there is absolutely no control. Names have had to be taken off of accounts. And in that situation, it is very, very hard to get ahead. I can't say that I've ever seen it. Even though names are taken off of accounts, we need control. I had a client that I talked to a while back, and it's every 10 years, his spouse just spends everything they have. And every 10 years, they're basically starting over. And so really, I don't know how to fix that situation. I honestly do not. But that is very hard to get ahead in that situation. The other question that was brought up is, if there is a divorce, is the cash value considered an asset through the divorce? And I have seen this a couple of times that yes, it is, but they are my clients and they understand that there's cash value there, right? If it is just a typical divorce where the attorney maybe doesn't know and people don't know what cash value is, it may never be brought up, right? Because we bought whole life insurance and nobody told us there was cash value in it, then it's not going to be brought up unless the attorney were to ask if anybody has that. And maybe people are getting smarter to it, but I can tell you that I have clients that are divorced that have tons of cash value in existing whole life. They didn't even know was there themselves. And so a lot of times I would think that that would be something that's not brought up. However, there are times where yes, it is. So again, depending on the situation. All right. I had another client that they are Canadians, moved to the States. They are ready to get started, which is absolutely fantastic, but we cannot do anything until they have their green card. So just know that if you are not yet a US citizen, it's okay. We can do something, but you need to have your green card, not just a social security number. And this happens a lot when I talk to people from South Africa, because they have come here to work on farms and they want to start something and they don't have they just have a work visa. They don't have a green card or citizenship. We need you to have one of those two things to get started. But what was nice here is once they do get started, they've got the money to start. But she said, I'm 40 years old. I feel like I should be further in life. I feel like there are other things I should have done. And there are things that we should be doing. And what should we be doing that I'm not doing? And so in all reality, for her, it's awesome because she really wants to figure out cash flow. How do I take this money that I have that I'm going to put in the policy? What do I do with it to generate cash flow outside of rental property? Because she does not want to have rental property. Been there, done that, don't want to do it again. And rental properties are not for everybody. And so there are a lot of things that people can do. Recently, I found out about Truo. I think it's called Truo. You can buy a car and rent cars like Enterprise. And because there is a massive shortage of rental cars, and you can rent cheaper cars through individuals than Enterprise because they're not going to be brand new vehicles, you know? So you can rent them cheaper. What a fantastic idea. So there's stuff like that you can do that you don't need to have hundreds of thousands of dollars to get into rental properties, depending on where you live. What is the best way to buy a vehicle or truck? It ultimately doesn't matter how you want to buy your vehicle. If you want to pay cash for it, then pay cash, but pay yourself back. If you go to the bank, they'll give you a loan for it. And if it's really low interest rates right now, go to the bank and then keep that extra money. Instead of paying cash, keep that extra money to use. If you're going to start farming, Cornelius, use that money to buy some cows or seed or rent land or whatever it is that you need to do. Another guy that I had another couple, there was a couple, they had some really good off the farm income, and they are doing some direct beef to consumer stuff. But they had a lot of credit card debt that they have been paying on for a very long time and basically getting nowhere because they're kind of paying interest only. But then he told me how many acres they own and what their loan is on it, and their loan's basically nothing. So they have all this equity in their farm, but they're sitting with credit card debt. So I said, well, it's going to take you another 8 years to pay off that credit card debt. Why don't you just take some cash out of the farm, and then you can wrap the credit card debt up into that, pay the credit card off, and then you can even take a little bit more cash out of the farm because they have another house on the property that they could do a VRBO with. So fix that up and turn it into a VRBO, or turn it into a long-term rental or short-term rental or whatever you want. Turn it into some sort of rental. But they were like, well, we didn't know how we were going to get the cash to do that. Well, you're sitting on equity. This is a prime example of why sometimes it is not the best idea to be paying down the land or paying down a mortgage, because the money that you need, you now have to go back to the bank for it. And so as they were not overpaying on anything, they weren't overpaying on their mortgage to pay it down faster. They just so happen to have that much equity in it. And so go get a loan to pay off these other things, and then you'll even improve your credit score, right? So for them, they just had not thought of that. Just something that nobody has ever told them to do. So they were going to check into that. But now what are we going to do? We're going to take the equity from the home and we're going to create a rental property that can create cash flow. So if we take equity out of the house to put into something that creates cash flow, that's paying for whatever the new payment on the house is going to be. And according to my calculations, it was going to be about $24 more a month or something like that. That's hardly anything to be able to use that money to turn around and create some cash flow. Then I had, I had another gentleman this week that had a lot of credit card debt. And he had the credit card debt because he bought a place that the owner said, oh yeah, you can have chickens and pigs and whatever in the backyard. Until the neighbor complained, and then no, you can't. And so if you're going to buy a place that's, 3-4 acres, make sure that you can have animals. So now he spent all this money into getting these animals set up and chicken houses and all this other stuff built, and he doesn't have any animals anymore because he can't. Neighbor said, no, you cannot do that. So now he's trying to sell his house and he's trying to move and trying to pay credit card off because we don't have the animals to sell to pay the credit card debt. The other warning here is if you are going to get a 0% interest credit card and you do not pay it off before the 0% period is up, you are going to get back charged interest on every charge that you had on that credit card. And that's exactly what happened to him. He said, I didn't get it paid off, and so they charged me interest going back. That is what they will do. Even though a payment may have been made, or even, maybe he was just making minimum payments or something. But they can go back. And so as much as I love 0% interest credit cards, because I really do, I've used them myself. I use them to start my business. My husband's used them to start his business. You have to pay attention to when that 0% period is. For mine, I paid it off a month prior so that they could not say, oh, hey, you didn't get that paid off. Nope, I wanted no I wanted no quarrels with them. And so I made sure that I paid it off a month earlier. So make sure that if you are going to use that strategy to get started, that you are paying attention to when that 0% runs out. Okay. And then I had a nice meeting this week with a couple that inherited some ground. And I posted about this last night on my Facebook page, but they inherited some ground and they've been farming with the kids. The kids have farmed with them forever. And instead of keeping that ground, they are thinking about giving it to the kids. And then we have an off the farm child that we need to decide what we need to do for equal value, which will most likely be a life insurance policy that the off the farm child gets. And then the farm kids get, each one of them gets a piece of land. I commended them on doing that because it takes a very big person to say, I have never owned this. I have farmed it. I have paid rent on it to mom and dad. I have never owned it. It is now mine through inheritance, and I am going to give it to the kids. And the reason they're doing that is because they said, if I can't even imagine what we could have done if we were 40 years old and would have had some kind of collateral. So kudos to them, even for thinking about it. Even if they decide not to do it for some reason, the fact that they're thinking about it and they're understanding and they're bringing themselves back to being that age, right? What could have we done? Could have we done better? Looking at the fact that these farm kids have farmed with them for years. They're a major part of the operation. They are major contributors. They get up every day. They work their butt off. The parents are recognizing that, and they are truly working as a team, and it is fantastic to see. Absolutely fantastic. And it does not happen often, but it does happen. And it happens more than people think. Somebody commented on my post and said, well, it's nice to see people aren't greedy pigs. I would not call people greedy pigs in the essence of the fact that there is a lot of pride that comes with the fact of owning land, right? And if we finally get to own it and we don't have to, or we have to end up skipping a generation, that's hard. That is hard to say, you know what, I want my name on that. And this couple said, hey, we're not saying that didn't cross our mind, right? Because obviously it did cross their mind. It's going to cross anybody's mind. But we really have to think long and hard. Does it matter? It's still in our family. It's still our land. Our boys would be farming it anyway. So let them farm it. Just have their name on it. And I mean, there are other things going on there that obviously need to be considered. It's not just that easy. It was a much longer conversation about the what ifs and a lot of that stuff that needed to get talked about as well. But there's some stuff that needs to go through an attorney, and there's things that need to get penciled out. So it's not all just cut and dry. But the fact that there is a conversation and a thought about it is just, it's so refreshing. I just don't get to see that as often as I would like. And I understand why. I 100% understand why. If I was in that situation, I don't know that I could think that way. Let's be honest. You farm it, you pay rent on it forever. You get it and you go, well, finally, I am 65 years old and I finally got it. Do you really want to just hand it off the next day? Right? That's hard. That's very, very hard. And I think as the kid coming up into that farm, into that business, you have to remember that. You have to put yourself in mom and dad's situation a little bit. And then, like, these guys are putting themselves in the kid situation. Like, everybody's got to wear everybody's shoes and just kind of see how they feel so they understand what the pain points are, right? And we can't just be so very cut and dry, as much as we would like to be. All right. Good morning, Petey. How are you? Hey, Petey, did you know I'm coming to Louisiana in February? Okay, let's talk about. Hey, Terry. Oh, Bruce, next week's podcast is going to be lively. Don't miss it. So let's talk about some of the bills that are going through right now. And again, like I said in the beginning, most of you weren't here, is that I don't typically love to talk about stuff that has not happened. It absolutely drives me crazy when people have all these presumptions. However, I just want to make you aware of the fact that I was listening to a podcast this morning and they were interviewing a banker, and he said, please tell people they just need to be aware of it. They need to contact their legislators. Right now, there is a bill in Congress that is trying to they want any transaction over $600 reported to the IRS. And so all the banks, Square, Venmo, any cash app that you use to pay people back and forth, any transaction that happens in your account over $600 needs to be reported to the IRS. That is truly going to give them access to your accounts that they have never had before. This is something that I found very interesting. Is the IRS, it's hacked like a ton. I didn't realize that. They actually said it in this podcast. Like 1,400 breakthroughs last year in 2020. That's crazy. And so how secure is our information if the IRS is going to have that information? Now, I don't know how they're going to plan to do all these audits, but apparently what they're trying to do is catch people that are saying, hey, you know what? I sold something to the neighbor for $1,200 and you didn't pay tax on that because there's too much stuff going on without tax. Well, like the gentleman that works in Washington, D.C. that was interviewed, and I don't remember what committee he works for, but he's like, the amount of taxes they're going to collect are basically nil. And the only people that they're going to really cause issues with are the people that don't have accountants. Everybody else is going to just forward it to their accountant and say, here, call the IRS on it, right? But it's the people that are going to be filing their own taxes that may be the ones that get caught in these audits, and they're going to cause just a lot of havoc for everybody. I mean, think about like if you sell something on your local classifieds. Like we have this page called Bizman Online, or what's the other one? Craigslist. So you sell something on Craigslist for $1,200 and you deposit that $1,200 in your account. Now all of a sudden you have to report what that transaction was for. Oh, sold a used sofa, right? That's absolutely asinine because now you should be reporting taxes on that. You're going to have to file 1099s with people because they bought a sofa from you. I mean, it's absolutely crazy. And so apparently I really thought this was going to be dead in the water and I've just kind of ignored it. But apparently it's getting pushed through and there's some activity on this, more activity than what most of us thought there should be. And so he's just saying, hey, talk to your legislators, tell them that this absolutely has to be killed because this is so stupid. So stupid. You know what's going to happen is there's going to be a whole lot of $599.99 transactions. That's what's going to happen. Because in my little brain, I immediately went to, well, I'll just deposit that in increments then, right? Or I'll just pay somebody in increments of $500 to fly under the radar. And we'll just do it twice. And so what's that going to do? That's just going to have more transaction costs or fees or whatever that is. Or you're just going to have less people depositing cash. And so now you're going to actually see more cash being used instead of less cash being used, in my opinion. In my opinion, I believe that's what's going to happen. And they're already saying, oh, there's a shortage of cash in the country. And so please don't use cash. Well, you're going to see a whole lot more cash being used because people just aren't going to deposit it. And they're going to say, I want $1,200 cash, right? Or you can pay me $500 that way. The rest of it's going to have to come cash. And so whatever that comes to, just be aware that it's there. The other thing I was notified of, and I still have to read up on this, But just want you guys to be aware too, is they're really trying to kind of get away from the Roth IRAs, limit them more. And so when the government says, hey, you can't, and a lot of people like Roth IRAs. If you have to put money anywhere in the market, I would do a Roth IRA. Just because you're putting it in pre-tax and you get to take it out tax-free, just like a life insurance policy. And so I would be, if I had to put money in the market, or if my employer was giving me a match that I could not refuse, then I would be using a Roth. Well, people that make too much money already can't put money in a Roth, right? Because the government says you make too much money. Who determines what's too much? Apparently the government. And so they already have limitations on all this stuff. And now they're putting more limitations on it and saying if you have over, I forget the amount. If there's too much money in a Roth, now we have to disperse it. And so why? Why are we going after all of this Roth money? Why are we limiting this Roth money? Because if we take the Roth money out, if they tell us we have to take it out, then what? We have to put it into an asset that is going to produce something we have to pay taxes on. And so we can continue to spend money. We can continue to print money in this country like it's water. We can continue to pay people and give people money for not working. That has to come from somewhere, and that's going to come from you and I. We are the ones that are going to have to pay those taxes. And they're going to raise taxes, and they're going to try to get it any way they can. And wealthy people understand the tax code. They're not going to pay this huge amount of money in taxes because they understand the tax code. They've read it, they've studied it, they figured out what they can use in the tax code to benefit them, right? It is the average person that is not making sense of the tax code, that is not paying attention, that is overpaying on taxes. Those are the people that are going to get hurt. As much as they say they want to go after the wealthy, that's not going to happen. Because the wealthy understand. They're going to find themselves a good accountant. Okay? I am obsessed with the tax code right now. I am listening to every podcast I can on it because there is a way. I don't know everything, right? And I am paying a boatload of money in taxes and I want to know how not to. I want to find a farm accountant that understands taxes, that is proactive, that is not a tax preparer, but an accountant. Okay, there is a difference between being a tax preparer and just preparing paperwork and saying, oh, this is what you're going to need, and this is the general here, and this is what we normally do here. No, look at what I am doing individually and tell me how I can do things better. What can I do? And that is just from talking to people, talking to accountants, paying attention, learning stuff. I don't want to be an accountant. But guess what? If you can't find a good one, you learn as much as you can so you can start asking questions. So maybe you can find a good one along the way. But we have to pay attention to those things, and we can't just expect that somebody is going to do what's right. In fact, I have a little story. So I was listening to my podcast yesterday, and I reached out to a friend of mine who has been doing phenomenal in her business. Absolutely phenomenal. Super exciting to watch her succeed. And I just texted her and I said, hey, are you an S Corp? And she said, no. I said, you're not an S Corp? You made a lot of money this year. And she said, yeah, due to bad advice, we did not set up the S Corp because my accountant didn't think we would make enough money this year. I said, well, please tell me you're at least an LLC. No, I'm not even an LLC. They are both operating as sole proprietors and they're both business owners. And the accountant said, I don't think you're going to make enough money this year. Guess what happened to me? The very same thing. My old accountant said, oh, yeah, it's probably not such a big deal that you're not an S Corp because, you probably aren't going to make a lot of money this year. I got hammered because I did make a lot of money that year and my business did take off. Since when does the accountant get to tell you and determine your future? Your accountant should say, if you make money, this is what you're going to want to do. if you stay where you're at, this would be better. You tell me if you want to be proactive or not. Unbelievable. I am so annoyed over the whole thing that I'm going to check to see if one of those accountants can be held liable. Because the amount of money that they are going to pay in taxes because he felt that they weren't going to make enough money is ridiculous. It's the accountant's fault. No, we don't need to file it. Horrible advice. Horrible advice. Give the client the option, and then that puts it back on them. Super frustrating. So as much as I don't want to be an accountant, as much as you don't want to be an accountant, as much as you don't want to be a life insurance agent, I still want you to understand what's happening on the life insurance side, right? I want you to know what's happening in your policy. I want you to understand how to be a banker. That's why I ask you to read the books. Not because I'm trying to sell books, but because we need to understand enough of what's going on that we can participate in the conversation and make a decision. If we don't ever do that, what do? We just give it to somebody else and then we try to blame them for it. So, is it some of my friends' fault? Yes. Is it some of my fault? When I got stuck with it? Yeah, it is. We have to do our due diligence as well. Good morning, Terry. PD, I will call when I'm down there. Well, it's the sugarcane conference, so we'll see you there. Okay, that is all that I have for today. Yeah, we talked about the Roth. I already forgot what I talked about. I got a little sidetracked. Okay, let me know. You guys know where I'm at. Let me know if you need anything. You can message me here, email me at maryjo@withoutthebank. If you've not gotten the books yet, Farming Without the Bank or Life Without the Bank, do that. If you have not read Nelson's book yet, Becoming Your Own Banker, do that. You can get any of those at farmingwithoutthebank.com, or you can go to withoutthebank.com and you can get it there. If there is something that you guys want me to talk about on a podcast that I have not already talked about, let me know. Happy to do it. Otherwise, I will see you guys next week. I should be here. Talk to you later.